and then price comes to this order block, and then notice how price pushes away from there because we had the order block there. Now compare it to this one, where this one took out this low and then went up. Was there any other block here? No. So this is not engineered. This is actually setting up for a run. This is setting up for equal low, and is going to come back and run it. Okay, the same thing applies to the upside. So if you're able to identify a run on stop, right, a run on stop, and then price goes down, this becomes a strong high, right? That we don't want to see price go above. So what's going to be above that high? Stops. We have this short-term high right here. Do we have an order block above it? Yes, this one. So what's going to happen when price gets back up here? It's going to run this high and then drop. Okay, once we've done that, then that high and whatever high that forms again, those will become now engineered liquidity or equal high. If you remember, anytime I say anything about equal highs and equal lows, I don't always point you to something like this. Okay, equal highs. I don't point you to something like that. I always point you to something like this as equal high, or it can be like this as equal high. Okay, and the same thing applies to equal low. When it's something like this, that is equal low. When it's something like this, that is not equal low. All right, so the idea is to identify. Let me go back and find more examples. For example, here we take out this high and then we drop. Okay, price comes back to this high and then drop again. So right, price has already done the job, so this becomes equal high. So if price is coming back up, this is what I'll anticipate. Yes, there is a rejection block here, so that can also be a level that will engineer a proper equal high. So price can come back up, hit this, go down, engineer that equal high, and then come and run it. Yeah, so that's that. So let me take you through the steps again. First of all, we're going to identify the high, a strong high. The strong high will come in by this. It's going to take out some stops and then go down. Once it goes down, this becomes a reasonable high. And sometimes you hear me saying something about dealing range, a dealing range, right? A dealing range. A dealing range is this high and something similar that forms on the downside. So like this one here, this low, so this low, so this low and this high becomes a dealing range. This becomes a valid range that you can trade within. So inside this you can trade order blocks because price is going to respect them. So you can trade order blocks, you can trade order blocks, you can trade inside the range. So price is going to only go outside one of that range based on the direction of the time frame higher than what you're trading. So if this is, let's say, a H4, then price is gonna break the direction where the daily is moving. So if the daily is bearish, then it's gonna break to the downside. If the daily is bullish, then it's gonna break to the upside. But this is a tradable range that you can trade because price broke down. And usually, if you understand your higher time frame, then you're more likely to sell to go down than to buy to go up. Okay, but let's go back to our understanding in the engineering. So price breaks down, this high becomes a strong high, this low becomes a strong low. We want to see this high protected, this low protected. So first time price gets back up here, it's either it's going to engineer or it's going to mitigate. So if it mitigates, then this becomes equal high. That in future, when price is coming back up, we want to see this high taken. And when this high is taken, price should come back inside the range again. Alright, when this high is taken, price should automatically come back inside the range again. Why? Because it's going to be building up, it's going to be having stop losses above here. Okay, and again, usually sometimes this high is also engineered to another high. You just have to open your eyes to what you're seeing in price. It's also engineered to another high, because price is always doing that. It's engineering and taking. Two things. Price is always either engineering liquidity or taking liquidity. That's it. That's all price is doing all the time.